Welcome back to Wisdom Wednesday. It's the Mortgage Man, Coach Clarence. Today I want to talk about mortgage forbearance. As we know, COVID hit a lot of people really hard, both personally and financially. And if you needed to exercise mortgage forbearance, here's some tips that'll help you get back to financial wellness. Okay, it's not the end of the world. First thing you need to do is don't lose hope. Forbearance is there for people who need to use that option. Conversely, it's not for everybody, so you don't do it. You need to have a conversation before you jump into something like that. Purchasing or refinancing a mortgage after forbearance is possible. This thing called the CARES Act prevented lenders from reporting late payment history to credit bureaus. That said, lenders are going to want to see that after your forbearance, you're able to make payments. So you basically want to see that you reestablish yourself after you've had to do that. Okay, most loan programs require you to make a minimum of 3 timely payments after the deferment period. Okay, number 3, know your options. How mortgage forbearance is handled differently depend on the type of loan, the lender. Each lender is going to review your present situation to see that what options will work for you basically, okay? Here are some options. Modify the loan terms through loan modification. This may mean that the lender adds the unpaid mortgage balance to the back of the mortgage, and that extends the term of your loan. You can add a second mortgage to the property for those missed payments. This may require you to pay all the payments either all at once or an increased monthly payment over time. All in once is considered a balloon payment, okay? When you're getting back on your feet, this is important. Make sure you focus on one bill at a time. And since your home is really important, make sure you're securing that, making those payments, okay? Then you can move on to your other debts. Again, get some good coaching so that you can know what to do and stay on top of your game. All right, if you're self-employed like me, be prepared for additional scrutiny. The pandemic has even established really long-term benefits. So basically, when you're self-employed, they'll scrutinize your income. And a lot of people decided to become self-employed during this pandemic, and that's going to be questionable. Lenders want to see that your income is going to be consistent and trackable for at least a minimum of a year, in some cases minimum of 2 years. It just depends on the loan and what you're trying to do. All right, with all that said, keeping this brief, it's the end of March today. We're heading into April. It's Easter at the end of the week. If you're celebrating that, have fun with your family and friends. All right, I'm here for your questions. You can reach me at 602-299-9357, and I look forward to talking to you and answering any of your mortgage questions as well as your fitness questions. You guys know what I do. All right, talk to you soon.